So let's talk about the effect of time decay, also known as theta, on the bear call spread. So just a reminder of what theta is. Theta is the rate of decay in the time value of an option. So remember how options are priced. Each option has real value, also known as intrinsic value, and time value. And with the time value element, because options are time wasting assets, the time element is decaying on a daily basis. And theta measures that time decay. So you're looking at a quote down below here for SPY. You can see that we have brought in the May 13th expiry with 5 different strike prices, and we also brought in the June 17th expiry with 5 different strike prices. And you can see we have a theta value here. So focusing in, for example, on the May 13th $211 call, you can see it has a theta value here of minus 0.061. What does that mean? That means that the time value of the $211 strike is eroding by 6.1 cents per day. As each day passes to expiry, the time value of that option is eroding at 6.1 cents per day. Now you will notice here for the exact same strike for the longer expiry, the theta value is lower. So that's a key learning for you, that theta erodes at a much faster pace as you get closer to expiry. So let's use an example here with the bear call spread. Let's do the May 13, 211, 212 bear call spread. So the first part of the trade is we're selling the 211 call, and the second part of the trade is we're buying the 212 call. Now the theta for each strike was, the 211 theta was minus 0.061 and the 212 call theta was minus 0.054. So remember though, as part of the bear call spread, you're selling one of the call options. So now that theta becomes a positive. The 211 short call theta now becomes positive 0.061 and the 212 long call theta stays as a negative of minus 0.054. So the net theta for the overall bear call spread on this particular example is 0.007. What does that mean? It means that the time value element of our bear call spread is eroding by just under 1 cent per day. But just remember, after you've placed a trade on a bear call spread, the share price is changing, and as the share price is changing, the effect of time decay or theta can also change. So just remember this, with this particular trade, if SPY trades closer to the lower strike, and in our case it was 211, profits will usually increase at a faster rate as time passes. But however, if the trade moves against us and SPY trades closer to the higher strike price, which in this case was 212, losses will increase at a faster pace as time passes. So just note that the effect of theta can be reversed if the share price moves against you for the trade.